Hi, my name's Mark Mazzarella and I'm a portfolio manager within APN Property Group's real estate securities team. Today I'll be talking to you about the APN Global REIT Income Fund, which is a strategy developed to invest in global listed property securities and based on our track record of investing into the Australian and Asian REIT markets built up over the last 20 years. So the strategy invests in the markets of developed North America, Europe, Australia and Asia, and is really geared towards providing access to a whole world of global property for income. We believe that the defensive, liquid and real asset properties of global listed property securities can be tremendously compelling for investors looking to gain exposure to a diversified asset class such as real estate across regions and sectors outside of the Australian market. So global REITs, and why now in particular after a tremendously unique year across both society and investment markets. I guess the attractiveness of global REITs, and in particular this fund, is the ability to access accelerating global market trends. So in terms of how we think about those accelerating trends, there's the opportunity to access them in a risk-adjusted way rooted in income through investing in such REITs that own assets in the industrial and logistics sectors, mobile phone towers, healthcare and life sciences in particular, which have really found themselves benefited in the main by the unique situation that we've seen over the last year with the pandemic. Global REITs also offer tremendously defensive opportunities, and one that we're particularly attracted to and able to access in this fund are REIT-preferred securities, which are essentially an ability to access the cash flows of REITs, but in a much more defensive, prioritised position of the capital structure ahead of common equity. And so that's definitely a part of the fund that we've capitalised over the last year in particular. There's also a focus on high quality income, not just income for its own sake. And there's definitely been a number of instances across the global REIT universe where we've been able to capitalise on high quality yield from tenants who have basically found their market positions strengthened due to the pandemic, and the runway for their growth is extremely strong, and being positioned to access the income from their revenues through prioritised rent is extremely compelling. And finally, and perhaps most importantly, is the fact now that on our numbers and on our assessment of fair value, there's some tremendously compelling and attractive valuations on offer in the market. There's an ability to access high quality REITs that own some of the best institutional grade assets in developed gateway markets across North America, Europe, and even Asia and Australia that are trading at really compelling discounts to their fair value. So an attractive entry point and the ability to gain that growth over the longer term is certainly some of the ingredients we're seeing at the moment. In terms of the extensive global commercial property universe, this slide basically shows that the depth and diversity of assets that are able to be accessed through securitized real estate and the global REITs is really profound. So according to UBS, global commercial property universe is around $30+ trillion in US. And when it comes to the REITs, the market capitalization is only about $2.5 to $3 trillion in AUD on any given day. And of course, as you can see from this chart, there's an ability to get some really attractive diversification across the developed markets, but also on the right, you can see the depth and variability of individual asset sectors, which really aren't available in the Australian market when you think of data centres, a number of self-storage type uses, as well as medical centres, healthcare, cell towers, just to name a few. Basically mainstream asset classes in a number of North American and European markets that are extremely compelling now more than ever, and this fund really aims to access those. Of course, on the next slide, you can just see that global REITs offer a really diverse and deep opportunity set compared to the Australian and Asian universes for listed properties. The global REIT universe basically dwarfs on just about every metric. So in terms of the number of REITs, the market capitalization, of course, is a lot higher. And the number of properties that you get direct access to is extremely attractive. Now, of course, one of the great attractiveness aspects of our fund is its focus on income and risk. So we fundamentally believe that an investment in commercial property is one in income, and we look to pass that through in terms of a higher distribution rate. And you can see in the top chart that we've compared that distribution rate to a number of other potential sources of investment yield globally. Now, of course, the risk aspects of each of those varies, and I'm not suggesting that an investment into the REITs and the income is similar to a term deposit, but just for relativity purposes, of course, the REITs and the global level, and of course our fund provides a relatively attractive distribution, and perhaps what we're most proud of is the low standard deviation relative to other asset classes, and of course every other REIT segment available in the market with our fund, indicating a 1 year standard deviation of around 30+% lower than global REITs generally. We touched on global REIT-preferred securities and of course how attractive they are at the moment given a focus on income, and our fund is unique in its mandate in able to access those opportunities. Lower volatility, greater income stability, and of course a depth and breadth of exposure across different REIT issuers from retail through to data centres, storage and life sciences as well. And of course the most important thing is the defensiveness and relative yield, which is much higher. In terms of the fund's portfolio, we definitely have a bias and prioritise quality over yield for its own sake, and of course are able to leverage some structural trends and position for a reopening off the back of improvements in economic conditions and greater societal activity. So in industrial, e-commerce growth is a tremendous opportunity that we see in the market at the moment, and we leverage that and exposed to that in the fund by accessing a number of high quality REITs. Industrial logistics properties is one of those. The REIT-preferred securities offer highly defensive and stable income. In terms of retail REITs, we've got a bias towards non-discretionary type retail, so grocery anchored centres in particular. And in office, we definitely look to focus our exposure to those that have non-generic space. So in the case of a number of REITs in the US, those that are leased to predominantly government and agency tenants as well as life sciences companies. And in specialised REITs, the opportunity in digitisation is fundamentally attractive, and of course we're able to get exposure to those mega trends through exposure to mobile tower REITs and of course data centres. I mentioned the compelling indicators of value currently on offer in global REITs. You can see from the slide and the chart on the left, there's currently a fairly attractive spread between earnings yields across each of the global REIT markets, as well as comparing that to their local 10-year bond yield. And of course on the right, the price to book relative to general equities is relatively discounted at the moment as you compare that to the historical levels. So REITs trading on about a 0.6 to 7 times price to book relative to general equities, whereas that normally, certainly over the last 10 or so year periods, is much higher at closer to 0.8 to 9. So indicators of value at the current time in particular. I guess on everyone's lips at the moment, of course, as well, is the impacts of inflation on real estate returns. And of course, as real estate investors fundamentally looking for stable income that provides the ability to get longer term capital growth, we absolutely welcome sustainable inflation. And real estate's a great asset class because at its very core, you know, it provides the basis for an inflation hedge with income increasing each year based on CPI or fixed increases to leases and replacement cost tethered to the underlying construction and materials inputs and labour prices. Finally, just whipping around each of the sectors globally, concentrating on a couple where we see some particularly exciting opportunities for income-focused investors. And that's in industrial, which is probably some of the strongest REITs globally in terms of their outlook in fundamentals, of course, with rental tension at the tenant level, flowing through to valuations and income. Of course, when it comes to mobile towers and data centres, digitisation is a trend that's continuing and one that we're very fortunate to be able to get access to in the global REIT market as well, and healthcare, of course, right through the stream and spectrum of acuity, from medical centres where you might go for your local GP checkup right through to hospitals. It's a tremendous asset class where we see a heap of opportunity at the moment across all regions. Thanks so much for taking the time to learn more about the APN Global REIT Income Fund, and we encourage you to have a look into it in a bit more detail if defensive income with growth potential and a focus on risk is something you're interested in. Thank you.